So, good morning, Wilkin.
Good morning, Graham.
I really appreciate your time today. I know it's a Saturday, but in terms of where we are with mortgages, all the problems that we're facing, or at least homeowners are facing now, I think it's quite refreshing that something that I stumbled across with a business partner of mine, Ian Spenceley. I think we met up in about 2017. And the topic of conversation was mortgage securitization. It piqued my interest purely because I was intrigued that I'd never heard of it, that the way it was spelt was with a Z. So it automatically put me in the mind, this is some kind of American thing. But I know at that stage you were quite involved personally with it. So just like to get some background on what your involvement has been, and really what your knowledge has taught you over, I think it's been 5 years now. So it's been quite a long while, but I still think the market's a little bit imbalanced. But if you could just explain what it is to the audience, then I think we can gain a bit of an understanding as to where it might go. So again, thanks for your time, and take it away, Wilkin.
Yeah, I got interested in mortgage securitization actually further back than the time that we met up at the motorway station with your business partner. I think initially I became interested in it following the credit crunch in 2008, because before the credit crunch, I was actually building property, would you believe? And I always remember an interesting conversation I had with one of the surveyors who came round because I was building apartments to satisfy the Irish investor market. And I stood on the scaffold looking down across the road, and across the road was a 3-bedroom terrace ex-council house on the market for 85,000. And I asked the valuer, why are you valuing my apartments across the road from a 3-bedroom house with 2 gardens and quite a decent street at 85,000 and my apartment's at 135,000? To which he replied, looking me right in the eye, and said, because I've been told to. And I said, well, who's told you to? He said, well, that doesn't matter who's told me to, but we have had instruction to downvalue nothing. Whatever it comes in at, we are to value it at that price and allow the mortgages to go ahead. Now, at the time, I'm thinking, well, I'm just in the right place at the right time here. Is it because we've got workers coming in from the EU who don't seem to mind living in apartments? But of course, as it's turned out, that I've now found out, is the banks didn't really care what the things were being valued at. They didn't really care too much about the risk profile of the person who was selling or buying them. What they were more interested in was getting as many of these things signed onto mortgage bundles as possible, because the banks were literally signing the mortgages and outing them to the investment market, sometimes within days. And in fact, we've seen occasions where mortgages have joined securitization bundles at the offer stage. So they didn't even wait, never mind the ink drying, they didn't even wait to have the ink on the paper. So basically, I've been interested in this for a long time. Obviously, being interested in mortgage securitization, I've now taken a much closer look at how the banking system works, because I have had all on, as you can imagine, to convince anybody that such a thing exists as mortgage securitization. And when I do my little demonstration and I show people a piece of paper that says, I promise to pay the bearer on demand the sum of £10, and it's duly signed by me, the bank of me, and it has a serial number and it has an amount. When I tell somebody that has got the same, in law, that has the same value as the £20 note that they have in their pocket, to which you may not, of course, want to take my bearer notes. You may not believe it's actual real, but the reality is, in law, that has got the same legal standing as the £20 note in your pocket. And now what has happened is, if you take an evening out in Manchester, the promise to pay the bearer on demand has gone out of the window, because you try and spend a £20 note in Manchester city centre, and I'll tell you something, half the places won't even take your promise to pay. So that's the fallacy. And the other fallacy that I found was people believe that they want to put their money in the bank to keep it safe.
Yeah.
In their deposit account. But of course, people do not realize that the deposit account is no such thing. The deposit account is a loan account. And the person giving the loan is the person who makes the deposit, lending to the banks or the building society.
Mm-hmm.
And this has all been confirmed by a guy called Richard Werner, and he wrote, the Bank of England wrote the white paper in 2014, Money in the Modern Economy, where basically they confirmed that what I've just told you is completely true.
Yeah.
Now, in securitization, what I've also found is that it's fraught with dangers. It's fraught with dangers. And this was highlighted back in 1991 in a white paper that was produced for John Major's government. But of course, the banks having the lobby power that they have, the white paper wasn't enacted, and the recommendations that were made by none other than Lord Peter Gibson, Julian Ferran QC, and a lady who we now know as Baroness Hale, were basically tossed out of the window, and the banks were allowed to carry on with securitization, putting at risk themselves and, of course, more importantly, their customers. So that's where my interest started with mortgage securitization.
Yeah, so this really looks like you've kind of inadvertently stumbled upon something that is explosive in terms of value. And you know, let's just look at a mortgage. It is possibly, if not the asset that anybody looks after. It's the first thing that's paid. It's the first thing that comes to mind when that check arrives. You know, the outgoings, most people, your mortgage is your biggest asset. It's the thing you really don't want to mess with. But what you're saying there is that it's almost as if there's been this underground market which has been going on in the background. So there is knowledge of it, but you've kind of scratched the surface and discovered this. Where does this kind of lead to the average guy in the street? Because obviously his knowledge is limited. He signs, as you say, on the dotted line, albeit maybe when the ink's not even dry, which is, it's a shock. I would imagine this is going to come as a bit of a bombshell for a lot of people. But where would you describe this as going in terms of the future, and what does it mean for an average mortgage holder?
Well, let's take it back to what actually happens as you mentioned mortgages. Well, the first thing everyone should know is the Brits, the UK, we are amazingly good mortgage payers. Our mortgages, our debts are in demand by everyone because we have, like you said, the first thing that we always pay and we always worry about is paying the mortgage. What we don't realize, of course, is that what happens is right at the beginning, let's go right back to the very beginning.
Yeah.
So you found a house that you want to buy, you inform your building society you want to buy a house. The building society says, well, let's first of all check you out. Now, this is really important because the only security the building society has initially is what's called your good word, your good character. Mm. So the banks check you out. If you check out and you're fine, then the banks will send out a surveyor to confirm for their own security that the loan, the property is worth the loan that they're giving. So we've got to the point of now being accepted for a mortgage, and the house is being valued at the value you want to buy it at. The bank then sends out, or the lender then sends out 2 documents to the solicitors. And I'm sure everyone who's ever had a mortgage will remember the solicitor instructing you to sign one of the documents, but don't date it. So what happens is you sign the mortgage agreement, which is the loan agreement, that once that is in the hands of the lender, they then create the money into existence. Now, like myself, I always thought that when you made a mortgage application, when you had it agreed, the little man from the bank ran down into the cellar, opened the vaults, a bit like a James Bond movie, and there in the vault was boxes and boxes and boxes of £20 notes, £50 notes, and he put them into a sack, put them into a Securicore van, and the Securicore van took them to the other person's solicitors, and we're ready to rumble. In fact, that's not what happens. That money doesn't exist until the bank has that piece of paper that you have signed. Once in receipt, the little man at the bank sits in front of his computer and looks at his piece of paper and says, Mr. X, is now going to pay me £100,000 plus interest over the next 25 years. I'll now create £100,000 electronically. Now, that money didn't exist either on the balance sheet of the person you're borrowing from or any other external organization before the bank received that piece of paper.
Wilkin,
So
sorry, can I just stop you? I think you said that until that signature hits the paper, the money didn't exist.
it doesn't exist.
Wow. Okay. Can that again? It's absolutely mind-blowing. But can you just go through the mechanics of that, just to let the audience catch up and see, how does that work, and why aren't we aware at that stage that that's the case? Because it seems like a little bit of chicanery is going on. Would I be correct in assuming that?
I guess we're not concerned, because do we really care where the money comes from?
No, I guess not. No.
And it's an old law. It's I think it was 1884, the Exchange of Bills Act, that allows the bank to turn that promise of payment on a piece of paper into cash. So that is the law that they use to turn the paper into real money.
Right. Okay.
So once you've actually got the paper, then what happens then is the bank sends the money to your solicitor sends it to the other person's solicitor, you then own the house. At some point in the future, so at this point, the only security for that loan is your good word. However, there's another document that you've agreed to sign, which is a charge at land registry, which gives the person with the charge the right to possess if you do not keep up your mortgage payments. So basically, I guess to the layman, who probably will not believe this, but the fact is that you're actually borrowing your own money and paying interest to borrow it. Well, there's an interesting fact.
Yeah, it seems the rabbit holes seem to start appearing. So in terms of where that mortgage lies, are you saying that effectively it's the interest portion of the mortgage that is being paid out or has been securitized in itself?
Okay. What happens now is the bank, again, we're back to what is the legal standing of a bank? A bank does not take deposits, as we've already established, but a bank also doesn't make loans. Legally, what a bank does, and again, Richard Werner, chief economist to the IMF, the Bank of England, the guy's been around the ECB. He has confirmed that in law, a bank is not a lender. A bank trades securities. So your little piece of signed paper has now become a negotiable security. And the bank will trade this negotiable security to get rid of the debt. So currently they've got £100,000 worth of liability. So that's got to be gone. That's bundled up into a securitization bundle, and the debt is wiped because a third party buys the debt, buys the mortgage from your lender. So at this point, the bank has got an asset and a debit, a credit and a debit of £100,000. It sells the note, and it also clears the balance. Now, under international rules of accountancy, for that mortgage note to be put into a bundle of securitization, the debt has to be cleared in full. So somebody, unbeknownst to you, using a power of attorney that is secreted somewhere in your application form, in your contract with the bank. I know people are going to go, I haven't signed the power of attorney. I can assure you, having seen thousands of DSARs, you have signed a power of attorney.
Right.
So basically, using that power of attorney, the bank then disposes of your asset, because of course it is still your asset, and sells it into a securitization bundle for not less than face value, but usually for a little bit extra than face value. The bank then acts as the servicing agent for parties unknown to you, and at some point will be even unknown to your lender, because these things change hands on a daily basis on international markets.
So again, let me just try and retrace. So let's say I go into Building Society X. I get my mortgage. I think that the money's been dropped into my account. I'm all happy with that. Unknown to me, the mortgage that I thought I had for 25 years has suddenly been sold. It's now moved on to a third party that I have no knowledge of. I had no part of what I thought was consent, but obviously I did. So where does that leave me and the mortgage now? Where am I as you know?
Okay. Well, we've got an even bigger problem, because in the sales and purchase agreement, when the securitization was sold, the person that bought it inherited, using the power of attorney, the right to set interest rates and change the terms and conditions. And again, it's all been done without your knowledge or permission. Now, that causes a major problem, because that's in breach of quite a lot of the current, and I shan't go into the whole ream of current rules and regulations and laws. So this now is floating around somewhere in the ether, so nobody actually knows in the ether, no one knows exactly where it's gone, it's just vanished. And amazingly enough, the bank is now misrepresenting its financial position to you by sending you a statement every year to tell you how your mortgage is doing, how much you've paid off your capital, if you're paying capital and interest, or how much interest you've been charged by the lender. And of course, the lender is telling complete rubbish, because they're told it, they no longer have but they play the game, because they're told by the buyers that they must not do two things. They must not tell the people who have taken out the mortgages what they've done, and they must also not change the registration at land registry, so that somebody could go into land registry and find out what has happened. So if you borrowed money from Building Society X, 5 years later, on land registry, the charge will still be registered in favour of Building Society X, when in fact, Building Society X has got no equitable interest or legal interest, because they sell both legal and equitable interest to the investors. So they've washed their hands basically of the whole thing.
So again, HMRC, Land Registry, are they? Let me get my head around this. Are they kind of aware of what's happened to that mortgage, or?
Well, I had a very strange conversation. I think it was probably now about a year ago, and I can't give any names. I was sitting in a car with a friend of mine who has got a friend who is one of the senior managers at Land Registry office. And I asked him, I thought, well, take the opportunity to ask him the question. And I said to him, when you have a bundle of securitization, a securitization bundle being registered at Land Registry, what do you check any of them? And to which he replied to me verbatim almost, well, of course we don't check them. They're coming in thousands. We just assume that they're right. I said, well, who signed them? I don't know, he said, I have no idea. I said, well, how is it a deed then if it's not been signed by anybody? Oh, I said, we do it all the time. We get thousands and thousands of them and nobody ever checks them, because... So you've got situations now where people who took mortgages out with, some of the lenders that have now vanished, Bradford and Bingley, Mortgage Express. Now on Land Registry, there are companies like Rasinka, Rossolite that now have the charge, and you're sitting scratching your head saying, well, how have they got a charge? I didn't sign any deeds. No one's asked me to change the beneficial owner of my mortgage. So how have they got a charge? And of course, the reason they've got a charge is because nobody at Land Registry ever checks them, because they arrive in huge bundles. And like the guy said, I would need thousands of staff to check all of these documents. So we don't check them. We just assume that they're right and we register the charge.
So it's almost business as usual.
It is, yeah.
And the result of that is that the mortgage you thought you had is no longer in its original place. It's now moved on, but there's no reporting mechanism that gets back to you as the owner. I made a look at it like this, Wilkin, very simply, because I'm a simple chap. But I buy a car, I register it, I sort of have ownership, I guess, under loose terms, but for all intents and purposes, it's my car. I continue the loan agreement with the company. If you were to look at how this looks using the same principle, it's almost as if that car's been sold from underneath me. I've now got a new company I've got an agreement with that I never signed up for, no contract. That leaves me in a pretty precarious position, because if it was a car, second value to a mortgage, a highly prized possession, I'd be livid about the fact that my car has just been sold from underneath me when I thought I had an agreement. You know,
Well,
is it as bad as that?
Graham, let me ask you a question. If you
Yeah.
bought yourself a new car,
Yeah.
would you take possession of the car without the logbook? If the
No.
dealer said to you, well, we're going to sell this logbook to another person, would you take ownership of the car? You'd be saying, absolutely no way, no chance, wouldn't you?
Yeah,
But
exactly.
in fact, that's what has happened.
Yes. Yeah. Yeah.
So what you do, you've now got, and of course the plot thickens, because when you actually go and investigate the company that has taken the charge at Land Registry, you find that most of these companies are servicers. Now, to lodge a charge at Land Registry, where's your legal and equitable interest in the property? Well, the servicers, how have they got one?
Yeah, this gets more and more complex. I think we've got to dig a lot deeper, Wilkin. But again, I think time's moving on. You've got things to do. I'm gonna, if you don't mind, leave it there. If you're happy to park it there for today. But I think what we'll do is we'll get this out to the interested parties at the moment and see where this goes. But once again, I thank you for your time on a Saturday morning. And well, I'm a little bit amazed, shocked, a little bit dazed and confused. But just thanks very much for your info.
Graham, it's been a pleasure.
Thank you very much. Cheers,
Bye.
Bye-bye.